Well, this morning we learned that Warren Buffett and his Berkshire Hathaway swooped in and invested $5 billion in the ailing Bank of America. And shareholders everywhere did the happy dance, including Mr. Buffett himself. Because let's face it, the world's third richest man just doesn't give his money away. Because in addition to getting a 6% dividend, his investment came with stock warrants to buy 700 million Bank of America shares at about $7.14 each. Now, those warrants, which are basically like stock options issued directly from the company, made the Oracle of Omaha a $700 million paper profit in the first 30 minutes of trading. Now, you can see why this arrangement is clearly advantageous to both parties. Warren already made money, and Bank of America gets a quick infusion of cash at a reasonable transaction cost, and it sort of helps calm the market's concerns about the company's liquidity. But remember, Bank of America is a public company, subject to laws that govern public offerings. But the deal with Bank of America that they arranged with Berkshire Hathaway, well, it was a private offering. So that means you and I can't get those terms. So much for public. If the government allows these kinds of deals, they're actually known as private investment in public equity under the securities law. But should they allow it? I guess the upshot is either way, it proves there is still an appetite for equities, and all solutions to market upheavals don't have to emanate from Washington. Sometimes they can come from places as far away as Omaha. That's just my 2 cents. So will this vote of confidence in the troubled financial firm be enough to save it from becoming the next Lehman Brothers? Joining us now, Richard Beauvais, Vice President of Rockdale Securities. Dick, thank you for being with us. What do you think about this? Many people still do not believe that Bank of America is safe.
Well, I think it was a sweet and sour deal with, Warren Buffett. I think on the positive side, it is, as you indicate, it was a way to build credibility for Bank of America at a time when it needed credibility in the financial markets. On the other hand, as you also indicated, the price was excessive. The price to Bank of America shareholders is going to be $3 billion over the next 10 years if this preferred stays in existence that long. In addition to which, Warren Buffett will wind up with about 6.5% to 6.75% of Bank of America. So it was a very, very high price to pay in order to get the safety that Bank of America needed to get because the management has no credibility with investors.
Right, so Bank of America essentially tried to buy itself credibility. But the stock didn't hold. I mean, it finished up about 8%. Year to date, it's still down 42%.
Yeah, well, the bank, I hate to tell you, the bank is not in trouble. The bank has $140 billion in cash. It has $125 billion in tangible equity. What that means is that all of the tangible equity in this bank is cash. And the market cap of the company is about $75 billion. So the stock is selling at a discount to book value, which is all cash. In addition to which, the bank does have, over $1 trillion in deposits, and those deposits are growing at the rate of about $5 billion a month. And I actually think in the last 2 weeks, the bank picked up about $10 billion in additional deposits.
But
it has 940. Yes, ma'am.
But don't you believe the market? I mean, the market is saying something, right? The market is killing this stock on a daily basis. Why then? I'm thinking the market knows something we don't.
Well, it's the monster under the bed story, right? In other words, I have 7 children, and they all believe there were monsters under the bed. And I think that investors believe that somewhere within that Bank of America loan portfolio, or even worse, somewhere among the securitized loans that Bank of America has made, is something like anywhere, and you pick the number, $50 billion to $500 billion in losses as a result of mortgages which are going bad. We've done, I guess, a lot of work the way everybody else has, and I think that the losses in those portfolios are about $35 billion. And even though that's an extreme number, Bank of America has written off $75 billion in the last 2 years, so it can afford it. And, there are 28 analysts who follow this stock. None of them believe that Bank of America is going to lose money next quarter, next year, or anywhere, in the foreseeable future.
But then why didn't Warren Buffett come out and just buy the stock outright? It was like $6 the other day.
Well, I think the reason is because Warren Buffett is a very smart man, and he's a very wealthy man because he knows how to cut deals that make a great deal of sense. And I think that the fact of the matter is that the credibility of the management of this company because of this indefinable loss potential, has been shot. And therefore, the company needed someone to come in and give it credibility.
Right.
Warren Buffett was obviously the ideal person, and the company made a deal with him, which was phenomenal.
And, you know, they did this
Warren
back.
Buffett.
Warren Buffett did this back with Goldman Sachs in 2008, right? $5 billion stock warrants. Although his warrants were $115. Goldman Sachs trading at 110. So maybe he's not all that smart. I don't know. Can you talk quickly, though, about the banking sector as a whole? Do you feel like it's finally getting itself out of the ditch that it's been in all these years, or are there still toxic assets sitting on these balance sheets?
Well, let me give you some numbers, because sometimes that works best. I mean, the amount of capital as a percentage of assets in the American banking industry today is higher than it's been at any time since 1934, when they started collecting the numbers. The amount of cash sitting on American bank balance sheets is so huge at the moment, and they've deposited this huge amount with the Federal Reserve, that there's $1.6 trillion, or 1,000 times more money that the Federal Reserve has ever had in this position, sitting at the Federal Reserve, because the banks took their money and put it at the Fed. So you need a second recession, which we may already be in, but you need a second recession of significant magnitude to shake the American banking industry. It is in very solid condition.
It just seems funny, right, that, you know, the taxpayers bailed out Bank of America. Warren Buffett now is going to make some money off it, and yet, you know, he'll go to a fundraiser and say that we should tax people more so that we could bail out another bank so he can make more money off of it. Just seems very circular.
Well, I know people get very upset when you tell them this, but the United States government, the United States taxpayer, made about $150 billion on their investments and their loans to banks in this crisis. And therefore, you know, they saved the banking system, number one, which saved the economy. And number two, they made $150 billion. I'm not sure what's so bad about that.
I guess it just, for the little guy sitting at home, something seems really unfair. Dick Beauvais, Rockdale Securities, thanks for being with us, sir.
Thank you.
All right, when we come back,